Afternoon. Welcome to our afternoon interview with Monica Burgos. I'm Scott Forsino with eXp Realty, an associate broker out of New York City. Monica is a very important local lender. We'll have some opportunity to speak to her, learn about programs and underwriting and closing deals. So good afternoon, Monica.
Hi, good afternoon. How are you, Scott?
Great. Tell us about your company and tell us a little bit about yourself and your background.
Yeah, so I work for United Mortgage, and I've been in banking since 2006, about 16 years now. And we do many different types of products at United. We have non-QM loans, which are for borrowers that don't have traditional documents. They don't report the full income on the tax return, or they might not have 25% down payment. So, for example, right now I'm doing a loan for an investor. He's buying an investment property. Um, he didn't have the full 25% for down payment, or he would rather, invest the funds in another property. So I got him approved with 85% loan to value. He only has to put 15% down. As long as the credit score is 680 and above. They have different criteria for different credit scores. Um, we could go down lower, but then it will require higher down payment. So for someone with a 660 credit score, they would have to put a minimum of 20% down. However, it's still a good avenue for people with less than 25% because let's face it, in order to purchase an investment property with a conventional loan, you need 25% minimum down payment. So this product allows people not just to qualify without the proper income, but also with a lower down payment.
I see. So who would this loan be good for? Self-employed people?
Yes, self-employed people, but also even for people who are employed with W-2s. So if the person employed with the W-2 doesn't have 25% for down payment, we can put them in the non-QM product where they only require 15%.
Interesting.
And they can purchase an investment property. And I haven't seen that in any other bank right now because banks are tightening up their guidelines a little bit more now, with this whole situation going on in the economy. I don't know if you heard, a lot of banks have gone out of business. Sprout went out of business about a month
Depot,
ago.
Loan Depot
Loan
went out.
Depot Wholesale and FGMC.
I don't know them. Who is that?
Yes. So, right now, these are tough times in the mortgage industry.
So let me ask you this. That means, it's as a listing agent, I think listing agents really have to have confidence in the buyer's pre-approval. And tell me how you can help buyer's agents and buyers get their offers accepted. It's working with you helps the buyer's agent and the buyer themselves. How? The first hurdle is getting their offer accepted. Tell us how you accomplish that.
So I usually put the application through an automated underwriting system, and we have two different ones. We have Fannie Mae and we have Freddie Mac. So I'll run the loan through both systems to see which one gives the best option. So I just had yesterday a borrower that wanted to purchase a home for 550,000. So I ran it through one system, and they approved him for 500. I ran it through the other system, and he got approved for 550. So what I do is I provide a copy of the automated underwriting system report to the listing agents and the buyer's agents. If they ask for further qualification information. Other than that, I'll ask the borrower for permission, if they ask for proof of funds, or other income documents, credit reports, because of course, those things are confidential. So if the borrower agrees and, in order to win the bid on the home for us to share their information, then we will do so. And sometimes that works because Listing agents, they're not trying to make it more difficult for people. They just want to make sure that if they put someone into contract, the deal will close. Nobody has time to waste. So
That's
that's
true.
the way I've been doing it, by making sure that every application goes through the automated underwriting system and that the system approves it. Other than that, I will not issue a pre-approval.
Right. Well, that's the point. Your clients and your referral partners really have to know that you're adding the value, because if someone is very, very mortgage worthy, it doesn't matter if they can't get the house or their offer accepted.
Well, you know what the problem is too, that some banks do not give access to the loan officers to run their own automated underwriting system reports. The processors do it for them. So if the loan officer doesn't request from the processor to do to run the report for them, they might be issuing pre-approvals without even knowing if the system approved the borrower.
Right. And that's the concern of a listing agent, where they're afraid to put their clients, the sellers, in harm's way or at risk if they pick the wrong buyer. They really, and it's unfortunate, because if someone is perfect credit, great income, great assets, that may not mean that they can buy the house. Or let's say it the other way, a non-QM loan, and QM, as far as I know, please correct me, is a qualifying mortgage. And
Yes.
the laws, Dodd-Frank and others, made some real particular specifications for a qualifying mortgage. So if I'm right in saying non-QM means that they're kind of a different program, right? Is that
Non-QM, non-qualified. So yes, they're not. Dodd-Frank law means that the person qualifies for the loan based on their income, like the debt to income ratio. We have the calculation where we have to ensure that the person earns enough income to pay for the home. With a non-QM loan, Dodd-Frank laws do not apply, but they have guidelines. So some of the investor guidelines could be 60 to 100 pages long. Others may be really simple. Like I have one investor that they only have like 10 pages. So as long as the borrower fits into that criteria, the loan will get approved. But non-QM is a whole different type of breed, I guess you could describe it that way, because you cannot get an approval from an automated underwriting system. You get approvals from the automated underwriting system on regular loans such as FHA and conventional, but not on non-QM.
Did you read the 150, 350 pages, all of them?
I usually do research based on the type of deal that I have. So if I have a deal, like right now, I have a really tough deal. I have a borrower, he has an employment authorization card, which expired. He applied to renew the card. It's been already, the 6 months were up last week. So it's been 6 months, but he was like taking his sweet time to give me his documents and just like putting excuses for everything that the bank requested. So now the time of the immigration status expired. The letter that immigration sent him that shows that they received his application. So now the bank is like, we need the new employment authorization card. And to top it off, it's a non-QM loan, so he doesn't report enough income because he's self-employed. So, those deals are tough to do. But, we do them because right now, with the way things are, we have to do all types of loans. Banks had shied away from those non-QM loans when, when rates were really low. We had a lot of refis, a lot of, regular conventional FHA. Now, the refi market just, went down. It's
Gone.
Disappeared.
I mean, non-QM people are so sexy now. People are opting for it, even if it's a higher rate.
Yes. So you know what? We have a new program at United. It's called TBD commitment loans. So what that means is if I have a question about a loan application, if I can't get, the automated underwriting system to approve it, or it's a special circumstance, and I don't want to issue a pre-approval without finding out if an underwriter is comfortable with approving a loan, we submit an application without a contract, and we call it a TBD commitment. So if the underwriter approves the loan, they approve the loan, they issue a commitment without an address.
I always wondered why that can't happen. I never understood. People should be shopping for homes with a commitment. All you need is the property and an appraisal. I never understood why that has not been done first.
So the reason why some banks shy away from that is because it takes time to review the application. So they would rather invest that time into people that already have contracts. But now that things have slowed down, I guess they have more time in their hands. And that's why they decided, I don't know how many banks are doing it, but United, I actually requested for them to do that, about 6 or 7 months ago. And they just started doing it about a month ago.
Yeah, I know. It's a weighing. You have to weigh it out. You're going to put money in a person who never found a house. But I think if you have the person committed, that means it's instantly a loan, and you have a lot of people who would be happy about a loan that's clear to close. Imagine making an offer where we have a clear to close loan. How are you going to beat that?
Well, it's a conditional commitment.
Of course.
But, it'll cut down, at least 1 or 2 weeks.
Right. I totally agree with that. And I think that if the issue is that of money, why wouldn't a bank should say, well, pay us $1,000, $2,000 right now. We'll underwrite it. So we're not wasting our money. We're not wasting our time. They should say, and a lot of people say, oh, okay, I'll pay right now. Put me at the top of the list. I'll get a commitment. Everything's fine, and I'll just find a house. And then
the only thing is, we're not allowed to charge any fees upfront until the borrower goes to closing. So when I say they don't want to waste time, it's not really. I shouldn't say it that way. I should just say that they were so inundated with so many applications when the rates were low that there was no time. There was not enough manpower or employees to review loans without contracts.
Right. I hear you. But they also made record profits, and now they're laying people off. So they really were there,
That's what happened. They had to hire more people in order to process and underwrite all the loans that came in. There were people working Saturdays and Sundays while the bank was closed, and even at night times, I was getting at 9 p.m., 10 p.m., 11 p.m. at night, I was getting emails from underwriters with questions and commitments and clear closes, and I used to be in shock, and I was like, wow, they were working around the clock.
Yeah, wow, that shows a real commitment on your part. That's impressive. That is. It's a great idea. And one thing I've worked with is as lenders, as a real estate broker and an attorney in the past. It's great having a relationship with someone that you trust and can get the job done. And I believe in really rewarding someone, and because of all the rules and the laws, you can't pay people, you can't do anything out of the ordinary. However, you can refer them business. You can certainly put them in a position where they can benefit through receiving introductions. So that's why I formed PlugIntro for myself, because I really wanted to be able to make a great impression on people, give them a chance, like yourself, a way to promote their business and a way to offer others. We're looking for reciprocation. Think about this. The people who say, oh, I rely on referrals. That means you're doing nothing and you're hoping it rains. Why not take some active steps, help others, feature others, give others the chance to really gain referral partners and clients and customers, etc., so that you have a chance of reciprocation. And don't keep score, just keep pushing out. And in the context of a PlugIntro platform, like you're giving this to your agents, We're not buying expensive dinners. We're not spending all night driving. We're just giving them a position on something that you host, which really can benefit them and their context as well. And I think that's really important.
Yes.
Yeah.
Thank you.
Yeah, well, I think that's powerful, and I'm happy the way you're letting us know why you're the professional to choose in a transaction. I'm looking forward to assisting you and your referral partners do the same thing and demonstrate their professionalism to their contacts and potential referral partners. The way you give them something, a value, you give your agents a chance to gain some exposure, they need to give their local business community the same chance. And you know what? We're here. You know, PlugIntro works for you and anyone you invite. So we're really happy for your participation and your expertise and your benefit.